right. Thanks everybody for showing up. Now, December 13th, updated our slide, 5 p.m. Eastern, the new time for every week. Thanks for showing up. It's a little bit easier than being later in the evening. But this is the trade of the week where we talk about some trading concepts and we focus around the actual trade of the week that went out every Monday morning. That is derived from the Trade Ideas technology and curated by a few of us here at the company. So we'll talk a little bit about that trade of the week and a few other things. But of course, to start with the old disclaimer, just reminding you guys that anything you hear us talk about should not be considered investment advice. We are content publishers. We're going to show you some cool stuff, some interesting technology, and how to use some technology, maybe a few trading axioms as well along the way, a little psychology sprinkled in there too. But it's not to be construed as investment advice. If you're looking for financial advice, you got to go to the guys that got the licenses that pay you, you pay them a fee to manage your money and have them tell you what to do, and based on their extensive backgrounds. But for us, we're here to just have a little fun, try and enlighten a few people about some technology, maybe a cool couple of trade ideas we'll give out at the end, and even go back over a few that were given out last week that worked out pretty well. Never want to spend too little time on this slide. It's the reason that our subscriber growth is going parabolic. We have a very good onboarding team. We have many different options for people. Primarily the live trading room is where we send everybody to start with. If they have a basic question, hey, have you been to the live trading room? No, it's free. Is it? Well, how do I get in there? And so we get them in there, and we've got Barry Anderson in there doing a great job moderating the room, as well as a handful of great traders that share their strategies and their trades in real time, as well as even sharing some cloud links and some configurations, which is very gracious. So this is where it's at during the day, during live market hours, the free live Trade Ideas trading room. We're usually up over 500 people there on a consistent basis. Aside from that, we've got the webinars, the Monday, Tuesday, Wednesday, Thursday webinars, and we've made them very simple. I should probably mark up this slide a little bit more and update it, but essentially we now have webinars at 5 p.m. Eastern Time on Monday, Tuesday, Wednesdays, and Thursdays. Monday is Jamie, myself helping. Today is myself with Andy helping. Tomorrow will be Dan and Brad going over some of the Q&A features of the technical part of the program, and then finally a trading studio with Jamie, with Andy and Jamie helping him. And so you're getting just a real diverse batch of content. Let me put it that way, every week. We tried to mix it up so we never have the same two people twice doing webinars, so we can really try and get some content coming from different angles. All right. Let's see. Additionally, before I forget, if anybody here, and I know there's a few that have not tried Trade Ideas yet, we are going to have an open house in January, but that's still January away. It's a week where you can try everything, but for those that are itching maybe to try the program sooner, what most people do is take advantage of the promo code Scott's going to give out at the end of the webinar and sign up for the 1 month of the standard. And when you do that, you're eligible for a one-on-one hour session with us, and that's where all the value really comes in. You can sit down with us and tell us what you're looking for. We can find a good strategy and a direction for you and make sure all your questions are answered correctly and subjectively the way you'd like to see them. All right. Let's move forward. Yeah, subscriber growth, just a proud slide of ours, again, having to do with the AI introduction tool here, and then addition to the staff, in addition to customer support and onboarding, has been a very good thing. Holly, the AI, this is our back office proprietary report, but I know we're working on something to come out next year because we'll have a full year of data under our belts for Holly to try and be an interactive showcase where people can have access to this information. But for now, it basically shows, Holly's still got the casino odds in her favor, breaking away from the less alpha line of the S&P over the year. Even though we started off really weak for the year, here's our Brexit, and then now the elections, and we're moving higher after the elections. But distance being made by Holly. Again, this is just kind of a great demonstration in the aggregate how these trades over the aggregate long term are generating casino-type odds, and we're very proud of that. Okay, agenda for today, typical market recap. It's just crazy market out there, very unusual. We'll try and highlight a few things. The holiday recap, the AI was extremely quiet today. There wasn't much really to be derived from it, but we'll spend a little time there. The trade of the week actually went live on the open yesterday. It was NDLS, Noodles and Company. We'll talk a little bit about that particular stock and the 5-cent pilot program. NDLS is part of that program. And we're going to talk more about that later in the session. But they're up to about 23 or 2,400 stocks now that are trading in supposed 5-cent increments. But we'll talk a little bit more about that. So NDLS is the trade of the week. We'll check in on that. I talked a little bit yesterday, and it'll be a repeat for people who were in the room yesterday, but, especially on these trades of the week, patience is really a virtue, and we'll talk a little bit about how patience can be used in trading. A new watch list. I'm going to go back to the 5-cent pilot program. We're going to create a watch list, and it might be something of interest going forward for some people. Take a look at last week's setups, how they triggered and how they fared, and then we actually do have a couple more setups to highlight this week. So let's turn that off and go right into the market recap. I drew a couple lines last night, but they got erased, unfortunately, because I didn't save my layout. It's always a good idea to save your layout. The lines that I drew was this line right here and then this line up here. Obviously, we have a runaway market. The train has left the station. You go back to these days here, every single day, the prior day's low was not taken out. It came close here, and then it started here. A little bit of a breather, and we're back onto the same thing again. You want to take out yesterday's lows and get in, good luck. This market is not backing up and not letting people in. Last night we talked a little bit about this candle here in the spider, kind of a spinning top doji, maybe signaling a respite. The IWM, I believe, also had one, plus it did have 2 days of respite. The Qs finally had their day. They finally got to catch up and say, hey, look at us. We broke out into new all-time highs as well. So now these four major indices are now all trading in all-time new territory. It was led by the it was led by the IWM and the Dow. The Dow we haven't looked at. The DIA is still screaming higher. I mean, this is just, wow. I can't put words to explain how strong this action is, not even getting close to yesterday's lows to try and even give a hint of a pullback to the dip buyers who want to get into this market. And when you see action like this, it kind of makes you also feel like there probably are people on the sidelines who are really wishing they were in this market right now, and they just can't get into it. So we're in the seasonality of the Christmas rally. This is one of the stronger seasonality Christmas runs I've seen in a long time. But the IWM, which again, like I said, was leading the way, kind of gave a little bit of a pullback today to allow for some rotation into the Qs, which is definitely what we got. But looking at that diamonds for the Dow, wow. I mean, I really thought yesterday could have even given us a little bit of a blow-off or a breather, but nope. We gap even higher and make it more difficult. Where could we pull back to? And I'll go back to the SPY, because this is kind of what I was talking about last night. These lines are significant. This lower line was a pivot line of resistance and support, and then resistance again, congestion. Then we busted through it after the election. And then we had these two little devil horns here basically holding us back at all-time highs. And the SPY pretty much went through that like butter. Had about 4 or 5 days above there. But look where it pulled back to, and this is where we start to look at the footprints in the sand and find ideas of symmetry and non-coincidence, for lack of a better description. Former resistance becoming current support. You never really want to look at the intraday prices. We always want to wait for the days to close so we can have a daily candle, just like you wouldn't wait for a weekly candle and start making decisions on a Wednesday, or looking at a monthly candle and making decisions on the 21st. Let these candles and let this price action close. All right, and both these times they did close back above that prior resistance point. So that's textbook prior resistance become current support. And then we broke back out and had a couple of really nice days. Well, last night I said, well, these were 2 really nice days. We could pull back to this other level right here, but this market is just so darn strong. Maybe there's a level somewhere in between that we want to see, and we really can't see it on the daily. But if you go into the SPY 15-minute chart, I highlighted a little bit of congestion here, resistance that became support. So here's a pivot line on the 15-minute. And the way it transposes into the daily chart on the SPY is as such. So I've basically given us two possible levels to pull back to, but boy, I tell you, pullback just does not seem to be in the vernacular of this market right now. And the same could be said for the Dow. The Dow had a really nice breakout, at this level here, but again, that's a pretty significant pullback from where we went. But these are the kind of levels and the kind of lines that I like to draw and look at that make sense, because when you start to see action like we had last week of the pullback into the SPY, bidding into this level and using this level of support made a hell of a lot of sense just by looking left and taking a broader look. Now, I want to bring Andy in to talk about something that's a little unusual that we've noticed. The VXX, which can be just a deadly widow-making ETF when it doesn't work, because it just has this horrible bleed to it. I forgot what they call it. But anyway, with the market been going higher, 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 higher every day, VIX is not. VIX is basing and actually put in a little bit of a green bar today, and I think Andy might have a couple of things to say about that.
Oh, yeah, thanks.
Mm-hmm.
Yeah, thanks, Steve. Yeah, I talked about this last week in my webinar as well, and because I noticed, as the market kept charging higher, you can see that first little green hammer it put in. Well, actually, the Dow was I think up over 300 points on that day. See that little hammer down there, Steve? Kind of on the market.
This one?
Yeah.
Mm-hmm.
Yeah, that was like a Dow over 300 plus days. So, and actually the VIX kind of finished up. And of course, this is the ETF VIX. It's not the futures traded VIX, right, which was probably up, even more on the day. But anyway, yeah, I'm starting to, notice and even look at the move we've had since then. And yet the VIX is actually going sideways. And like Steve just said, it's actually kind of gone up a little bit. So
diamonds and compare that.
There you go. Yeah. There you go. Just go back and forth between the diamonds and the VIX there, or the spiders. But nonetheless, and what that tells you, a VIX, is a barometer of the put buying that's going on in the market. And what happens is people are most likely hedging in this situation versus just shorting the market. I mean, just to blindly short the market when it's roaring up like this is kind of foolish. So probably what you have is a lot of money. I kind of want to steer away from smart money and dumb money, but let's just say people who are in earlier are protecting their gains right now and starting to, buying a lot of puts to protect their profits in the marketplace. But anyway, to see the move that we've had over the last week and yet see the VIX pretty much go sideways and maybe even up a little is a strange phenomenon. You only see this maybe a couple of times a year. And it happens in overbought conditions. And I tell you guys, as much as, I would like to just stand and cheer this market on higher and higher, when you get movement like this, if you want to put those diamonds back up, Steve, I think it's on a mission, and it's pretty obvious what the mission is, and it's Dow 20,000. Yeah, Dow 20,000. Yeah. And a possible scenario here, guys, because you cannot stretch a rubber band. It's kind of like bouncing a ball in the air. Okay, it reaches a certain point and it becomes actually stationary for a little bit and then starts to drop. And the same thing with stretching a rubber band. It only has so much elasticity to it, and you stretch it and stretch it, and it's got to come back. Well, I think what you're seeing here. And I am not going to predict that it's going to do this, but a likely scenario is you could see the Dow, because let's face it, it's not like it's going sideways and blasting through 20,000. It's come a long way to get to that 20,000 mark, and it is a huge number. It's a mega whole number, and much like Dow 10,000 was years ago, when you guys, all the old grizzled out trader like myself and Steve can remember, but everybody have their hats on and celebrating. So a possible scenario, as you can see, and that's maybe why the VIX is, because people in the know, or people that's been around the block a few times, they're saying, okay, yes, they are worried about that. We've come a long ways to get there. It's over exuberance. It's stretched out. So we could definitely hit that number, and let's see what happens after that. I will tell you what, if it doesn't pull back and starts going sideways, oh man, I don't know what to think. So that's
sideways at the 20,000 level.
exactly. Yeah, I'm going, whoa. After that move you just had, and you're not going to pull back and breathe here. So anyway, that's something to watch out for. A possible scenario is we do hit that 20,000, and then we have some major selling coming in.
Yeah, I think what you're seeing here is just concern. It's insurance. It's buying insurance just in case. But you don't see it too often. And when you see it, you want to kind of pay attention to it.
Yeah.
All right. So, so congratulations to Qs. You made it. You finally made it to new all-time highs. You've joined the other guys. So, all right, well, on to the next event, which should be Holly recap, which really was a quiet day, guys. I mean, there wasn't really much to discern from Holly today other than maybe some directional bias from these are West Coast times, so from 10 o'clock on to 11 o'clock. I'm sorry, 10, and then 11, 12. You know, the first 1, 2, 3, 4, 5, 6, 7 trades of the day basically were long. And if you notice, coming into the day, Holly kind of had herself set up for that. And I don't like to ever second guess myself, but after seeing some of the spinning tops last night, I thought, boy, it sure would be nice if Holly had maybe a couple more short strategies in there, but that's not for me to determine. That's where the numbers and the chips fell, and sure enough, this market just kept going higher. So there were attempts at some trades, some winners, some losers, but on the whole, you're seeing a day where Holly just didn't see it. If anybody has a tool they're selling you that absolutely destroys and slays the market every single day, then they're selling you a bill of goods. This was a day that was just kind of a day of rest for Holly. Again, in the aggregate picture, in the bigger scheme of things, and we'll have more interaction in the coming year, next year, on our website. But the aggregate is up. The casino is up. But today I searched hard to find a great trade, even a possible hindsight trade around, and couldn't really find one. So today is just one of those throwaway days that we pay attention to the frequency of trades, which was very few. 7 or 8 trades is very few in the
especially with the number.
Yeah, and then also the direction. So the direction was definitely long, but the trades were few, and what that means is that Holly is just not seeing a statistical advantage. There's just a bunch of statistical noise in there. So, did you want to add something?
Yeah, I do, Steve. When you look over there and you see, although we do see a few of them up around the, would you sort by winning percentage there in the AI strategies window? I'm sorry, in the AI, by winning percentage, the far left.
Coming into today. Thank you.
Yeah. Okay. Yeah, you had one accelerator, which I believe is a new one, Steve. The accelerator is a new one, and then we had a 67%, and then a 63%, and a lot of them right around the 60 area, and even a little bit lower. You want to pay attention to that when it comes out, because with all the strategies we had in there, yes, that one accelerator was very strong. I didn't fire off any trades today, but usually if you look at it, you'll see a lot of maybe around 70, low 70s, high 68s. If you come in here and you see a lot of them right around the 60 mark, it's just kind of telling you that, hey, and it probably has something to do with this parabolic market that we're not seeing a lot of setups. Holly's not seeing a lot of setups in the marketplace when you see a lot of strategies around the 60 mark versus mid to 60s to upper or mid 70s, because you will see a lot of those. But I just now noticed that accelerator. I don't know why I missed it today.
Yeah, and that's the kind of thing where you could do it. You could come in here in the day and say, well, you know what? I really like that accelerator, and I like the way these bouncers have tested. Everything else I'm not liking, so I'm just going to go in here. I'm going to make sure I've got accelerator checked. I'm going to make sure I got bouncers checked, and that's all I have to do on my open positions. Everything else becomes muted for you. But if the one that you wanted to keep an eye out for does pop through, you're filtering for it coming through here based on the evening scans. Good point. I didn't catch that either. I think it was because it was like I didn't have it sorted correctly.
It didn't fire off any trades either. We would have caught it.
That's true. Yeah, that definitely would have caught my attention. Okay, so that's that for Holly today. Hopefully tomorrow a little bit more performance from her. Where are we here? Trade of the week, NDLS. I see a question regarding, do we track the performance of the trade of the week? We do have something in proprietary. We we may release it next year, but I can tell you the trade of the week in aggregates are up. Not all of them are up. CWI actually went up 500% for us. PayPal went up a lot. I'm sorry, Yelp went up a lot. We had some great steel moves. So I don't necessarily have, a complete chart on the trade of the week, but for the most part, averaging out, they're doing fine over the course of the year. There's a couple of big winners in there that certainly helped. And there's some losers and there's some medium winners, so it's kind of all over the board.
Mm-hmm.
But
and
this week,
if I can add something to that,
yes.
Steve. Also, we give stops, but we don't necessarily give targets, because some people may want to hold 2 or 3 days, other people may want to hold 2 or 3 months. So it's hard to track the performance because we really don't take price targets and sell the stock and all that. We're just giving ideas.
AKS was a trade of the week, and these are obviously the kind of things that we're looking for going forward. I think Yelp had a decent year before it had a little fall there. CWEI, of course, was an absolute monster. But let's just imprint on the CWEI here. Look how it looked down here. Kind of interesting. Well, these are typically the trades that we're trying to look for. We call them the trend change lubricant. Let me just jump right into that and take this off. This is our trend change lubricant scan, and it's a top list. And throughout the day, we're constantly monitoring stocks. And as you can see, I could probably just go right down the line here, and you all see that these are stocks in horrible downtrends. But what we're trying to do is isolate a possible pivot level and marry up that pivot level along with some extra secret sauce, which is on here as the short float and the percentage of that short float. And so a lot of the trades do kind of come out of that barrel. So let's jump right into noodles. And if I just look at this, there it is right there. I don't have to type it. See, this is where we find this stuff, guys. Very similar to what CWEI looked like many moons ago. And CWEI, if I recall, had about 57% short on 9 million shares. Well, let's take a look at our NDLS here. What we've got for NDLS is 23%, which is pretty decent, on 26 million, which isn't small, but it's not large by any means. But what happens is we start to try to identify these levels of these high shorts as to where they might start to throw up in their mouth and panic. And it's happening left and right. What's working? Short squeezes are working. You saw the market. Market did an unbelievable head fake on election night and then has just been ripping up straight since. So there's tons of short sellers out there in tons of stocks, and they all need to decide at some point, when do they fish or cut bait and let it go. So zooming in, we had basically just the $5 level, which in itself is a very nice psychological level that short sellers don't like to lose. Also corresponded to this wick over here and very close to the close here and a couple pennies away from these wicks. So what we want to do on these trend change lubricants is identify the pivot point. Let's go back again in history. Let's go back to X. All right, here's our pivot point in X. Support, congestion, resistance. Here's your pivot point. Look at what happened when X with 56% short the float got above that pivot point. All hell break loose. Same thing with CWEI. Here was our CWI level right here. Support, resistance back there. Once it got above, it had to think about it a little bit, but then once the short sellers came to their senses, the horse race was on as to who could cover their shorts the quickest. So these are the kind of setups ideally, that we're looking for, and NDLS could be very early in that stage. The orange line is basically the downside that I called out, which is still kind of tight. Ideally, it could be a little bit lower, but we have to be, I'll get to the patience in a minute, we have to be patient and let these things breathe. These trade of the week emails that come out, they are not the scalp of the morning, okay? They are the position trade of the week, and sometimes they may even take a few days to trigger. Oh, speaking of, 3 weeks ago, we had one called INVN. The trigger price was basically up here. We called it out very close. We never got close to our trigger point. The trade stayed as a dead trade, but I said keep an eye on it. Use your price alerts because this thing could inevitably come back to life. And again, patience, a little bit of noise in the market is always there. But there was a news event, but it happened midday, mid-market, Alerts went off. You had a chance if you had them set. So, I'm not going to try and pat my back too much, our back on the trade of the week on this one, because it basically kind of fizzled out here and didn't do what we thought. When we thought. We were just a little early. It did, in the bigger picture, do what we had kind of hoped. There's your trigger point right there, and with some short float in there as well. So back to noodles. Here's what I'm liking about noodles. Yesterday, the price opened right at our trigger point, 5, ticked above, and then kind of traded below. So if we go into the 15-minute, we can kind of see a little better what was happening. Here was the opening trade right there. The price went live, as you can see by the green price alert trigger, and then pulled back. Now, this is what we call one of these new 5-cent pilot program stocks. You'll see it went up to 5.10. It could also trade at 5.05. Now, before somebody asks, they're going to ask me, well, what's this little tick right here at 483? Well, I did some research today because I didn't know the answer to this, and reached out to a very well-known guy in the industry, and he said those are dark pool mid-range points. They're approved. They're approved if a buyer and a seller can meet between the 5-cent level at the 2.5 or at the 7.5. There's some sort of mid-range, mid-price exemption, I guess, for dark pools. Hooray for the lobbyists for probably coming up with that one to protect somebody out there. But before somebody asks me on these nickel stocks, hey, Steve, why are you seeing trades in between? Well, those might be dark pool prints that are exempt from the alert. Excuse me, from the program. Somebody's saying, how do I catch the spike in INVN? Do you have the alert? It wasn't an alert. Lajo, it was the actual trade of the week. Last week's trade of the week, I believe, was what was it? CLF. It was CLF on the long side back here. The week before that, it was INVN. So INVN was the trade of the week, right about here, as we were coming back to this line. And again, it was more than likely something that I derived with my own eyeballs off of the trend change lubricant. So all these still fit the same type of method. We're looking for trends that are changing with high short float percentages. The third time, let's get back to noodles, because I love the way it closed today. It came right back. It's not showing up here, but there was a real, you can see it on my single stock window. Look at the volume in the last 5 minutes, 1,200%. I love the way this thing closed, right up, nuzzled right up next to 5 on 12 times normal volume for a 5-minute candle, and it really put in a very nice close. So a bit of a fake out yesterday, which this market is wonderful at doing, but if you can exercise patience and have liberal stops in a bigger time frame and not try and second guess yourself every moment of the day, you can just say, hey, that's okay. I would have preferred it followed through, but I understand this is how the market is. It wants to try and really shake people out. Well, today we had a really nice close. A lot of action came in, popped right up to 5. 3% and 26 million on the float. So I like to know what those numbers are. Those are mid-range numbers, because when those numbers are in your head and you're seeing the price alerts go off, if you don't have those numbers in the back of your mind, it's easy to just talk yourself out of this trade and say, well, it's probably just going to reverse on me. But when you put the hat on of your adversaries, meaning the short sellers who are in pain, you'd probably be thinking, I need to get out of this trade. And so it helps give you confidence knowing those metrics, knowing the float, knowing the short float, and where that trigger point is. If we can get a nice push through there and hold above there. Ideally, what we need to see is a close above that line. We had a little wick through there yesterday. Tomorrow, ideally, I'd like to see a close below that line. Now, if we do get any upside, well, the first level of resistance is probably going to be something like right there. Oh, shoot, why did I do that? Hang on. Crosshairs off, delete. Crosshairs back on. First level of resistance is going to be right here, okay? All you got to do is look left. This is where the support was, some sideways action. So there's some people here, or some traders here, some supply here, whatever you want to call it, that more than likely could come into play. And then beyond that, hopefully, that will be the next line of upside resistance. You see how far this stock has come. I actually was at the mall the other day, did a channel check for you guys, like a good hedge fund would do, and Noodles and Company had a big, strong line as the Christmas shoppers were in there. I'm being facetious. I know that's one store, but this is a bona fide company. If it can get itself back above $5, could be very interesting short squeeze on that one. So that is your trade of the week, the methodology behind the trade of the week, and what we hope to expect from the trade of the week. Let's see. I'm just going to go back to pot and try and illustrate the patience I wanted to talk about today. One of the hardest things that I learned as a day trader was watching, and let's assume that these are 5-minute candles. One of the hardest things I had to learn as a new trader was to buy this breakout, even though it looked great on the daily chart, and then sit through here, have some winners, winners start to increase, and all of a sudden my P&L starts to go backwards real quick. And then you go, oh my God, my fear is that what I once had in my P&L I'm going to lose, right? I think a lot of people can probably relate to me on this, especially if you're trading real money. It doesn't come into play as much when you're paper trading, but when you're trading real money, this is the kind of thing that starts to come into play. But this trade was not taken as a scalp. It was not taken as a day trade. It was taken for a reason. It was breaking out, and it was showing signs of sector strength as well. A lot of the agriculture stocks were doing well. So the hardest thing to do through a day trade is to sit through this first 5 or 10-minute candle pullback with the faith that you know by the end of the day that you're going to be right and you're going to have some more. This really is one of the hardest things to master, especially as a day trader. Well, that's one of the reasons I prefer swing trading, is because it's easier to have a little bit of patience sometimes. Great start. We had a great start. This full candle was the active day, but then we had 2 days of pullback. And this is kind of typical for how the market works. You get a nice textbook breakout, and then you get the shakeout. And the strong survive, the patient survive. I did enjoy seeing this little green candle right here. I enjoyed seeing these little narrow range bars right here, because they were not really dipping too far down lower. They were just kind of trying to dig into a base and create a base. And then the patience paid off, and we got our move, and then some more of the move. So I just want to remind you guys that patience really is a virtue in trading. You know, if you feel like you got into a trade at 550 in your day trading, and you think this thing can go to 6, and you know it can go to 6, and you get freaked out because it went to 570 and pulled back to 560, and you bang out and take 10 cents, and then wonder why at the end of the day you're still not in at 6, you lost your patience, you changed your plan, you got emotional. Some of the things you can do is, if you have to, one of the easier ways to grease into trying learning more patience is sell half. Selling half always kind of satisfies those demons and doesn't sting so bad if the price pulls back on you. But what I'm saying is you know, have a plan, stick to your plan. Don't change your plan midstream, you know, unless the price action changes, you know, or unless the market changes. If the market goes into a complete, you know, 900-point tailspin dive, then all bets are off. I don't care what your plan is. But these are the things you got to keep aware of. So patience is definitely a virtue. I understand it's hard. We are wired to fear the opposite. We're wired to fear that the money that we made is going to be taken away, so we fear and we get out. When in reality, we should be fearing that we are going to be left behind when the trade does exactly what we expected it to do in our normal state. So we're kind of got a hand tied behind our back when we're born, because that's just the nervous system that we got. What is the price target on pot? Again, we don't like to give price targets. Everybody's different, but again, it's been a nice couple of days of pullback. I mean, we can see exactly what happened, right? Okay, let's zoom out, guys, and look left. Probably not a real head scratcher that pot ran slam right into this congestion back here. So this could have been a perfect example for somebody after a lovely run to maybe sell half, and that half might allow them to have a little bit more of a breather. So something to consider, and again, another great example of where to look left when you're trying to figure out where your price targets are. Some people's price targets might be good for a week. Some people might want to be in these things for a year. You know, for the ones that are still in CWEI, I think they're feeling okay. But it's personal preference, and our idea is to try and help you find a trigger point, whether it's a pullback or a breakout or a gap fill, but a momentary time in space where this trade, you know, should be a good entry. Where it goes from there is up to you as to how you want to manage it. We will give suggested, you know, risk managements, but you guys got to figure out how far you want to ride these things. I can't always predict that. So we're still sitting here talking about patience. Anything you want to add to the patience virtue?
No, Steve. Yeah, it's a very good topic, and the mindset for swing trading is so much different than day trading. It's difficult sometimes for day traders to adapt to swing trading. We know because Steve and I had to do it, and we didn't have to do it, but we were getting involved in other things, and our time was kind of taken up by those things. So we started getting more into position trading, and I tell you, it's a lot less stressful because it's like Steve's saying, you know your risk and you know your potential reward when you take these trades. And as long as you're sticking with your stop losses and moving forward with your risk parameters and knowing where you stand right when you enter a trade, it can be very rewarding and with a lot less stress than jumping in 3,000 shares of a stock and hoping it goes 10 cents before it pulls back a nickel.
And living and dying on every pullback and breath.
And yeah, just sitting there watching the level too and every tick. Yeah. And with today's algorithms and high frequency traders that are in the market, guys, that's why you have to use liberal stops, okay? Because if you're jumping in that potash he just showed you and using a 50-cent stock, I can almost tell you right off the bat you're going to get stopped out. You need to play enough size to give yourself. I'm not sure exactly where Steve's stop was in that, but I bet you it was like a dollar at least. But when we made the trade, and just use liberal stops when it comes to swing trading and relax. Don't sit there and stare at it all the time. That's one thing I love about our price alerts. Our price alerts are so cool because, like, what I like to do is put the price alert in the level that I think needs attention. Whether it's my stop level or maybe a few cents before, where I'm going to be alerted to with my price alerts, and know, okay, this one's not going in my favor. Let me take a look at this. Let the ones that are working. It's like Steve said, we're wired to fear when stock is moving in our favor because we fear those losses are going to go. We're going to lose them. When just the opposite, we should be hoping when the stock's moving in our favor, hoping that it's going to continue.
Fearing that you're going to lose out on the bigger move that you originally saw.
Exactly. Yep.
Somebody's asking me, are there swing trade? Well, this is actually what I've been trying to say. This is a swing trading type of an alert. We tried what it doesn't pop up and say buy this stock and hold it for 24 days. No, there's nothing out there that's going to do that for you. But this particular stock gives me setups of stocks that are possibly ready for a reversal. Now we're going to go into that in the very last chapter here. I've got about 6 stocks I want to set up for you. But before we do that, I've got something I want to get to. Window to me, and I had no idea that there's 2,300 stock symbols in the 5-cent pilot program, and it continues to grow. So what I'm going to do is I'm going to drop this link in here, which has all of these symbols. And I'm going to give you guys this link so you have this link. So pop open the chat window with the plus key, scroll down below where I put my bio, and there's the link right there. Now, I'm sending that link. I want you guys that are curious about these 5-cent pilot program stocks and how many of them there are and which ones they are, please bookmark that link because going forward here, I'm going to show you, something you can do. All right. I went ahead and I made a watch list. Why not? If we've got a certain group of stocks that all trade in 5-cent increments, why not know which ones they are and set them aside, and let's create a watch list. So I'm going to show you how to do is create a nickel watch list, which I've already done. I've called it nickel slots just because I like to have fun with names, and there it is right there, nickel slots, and look at all those symbols. So I'm going to show you guys how you can do this. And then once you've got this watch list as part of your library, you can assign that watch list to any other alert that you might want and see if it changes things up a little bit. All right, a quick Windows tutorial. We want to highlight all these. So what I'm going to do is I'm going to highlight the first one. I'm going to hold my Shift key down. I'm going to grab the scroll bar because it's a heck of a lot faster than just trying to highlight them all at once. I'm going to take my scroll bar to the bottom here to ZYNE. Oh, shoot, I let go. Oh, there we go. And then hit the Shift key again. I didn't do that correctly. Let me try that again. Hold that. I'm going to start from the bottom this time. Hold the Shift key down. Go back to the top. And why can't I get that in there? What am I missing here? A, C. Shift key. Okay. Press the Shift key. Basically, highlight the first one, go down to the last one, press the Shift key. The Shift key is going to highlight every single stock for you. Just go ahead and grab any single one of them. Copy. You're copying all of the symbols. All right. The watch list link is in the chat window. So if you're not seeing it, go to the GoToMeeting chat window and expand the chat window, and there's a link in there. I'll pop the link in here as well. I think I already, oh no, I didn't want to do that. I just populated everything. Never mind. Okay, so I've got these copied. They're on my clipboard. Now what we need to do, I'm making this more difficult than it needs to be, is go to Tools. Okay, we still got all these symbols in our clipboard. We want to external linking. We want to, let's try that again, symbol list. We want to create a new list. So go ahead, create new list. Call it whatever you want. I called it nickel slots. Call this one nickel test. Click OK. Now, we've got it named. Whatever you call it, whatever you want it, it's empty. But grab it, edit the list, and this is what the window looks like for editing a list. And Control V or right-click paste, whatever you want. There is all 23 symbols that all trade in 5-cent increments. Now we have a complete watch list that we can use and trust that is basically full of nothing but 5-cent stocks. All right. So what can we do with that? Well, there's a couple things we could probably do with that. The first thing that comes to mind in my mind is, well, what happens if I substitute that with another strategy? So I did. You guys are familiar with a Holly strategy that shows up from time to time called quarterback. Quarterback's basically looking for stocks that have run up quickly and have pulled back 25% very quickly. Thus the 25% quarterback is the name. But I decided, what if I took that same strategy and rather than using all stocks in the U.S. markets, what if I designated in my configuration, what if I designated a symbol list, which I did, nickel slots. So now what I've done is I've created another quarterback, but I'm calling it Nickelback because that's just a funny name and people hate that band and I like to have fun with names. But it's nickel type stocks that are pulling back. The theory is maybe we can get some better fills, maybe some better spreads, maybe some better alpha. But how do we know? Well, let's take a look. Let's just go ahead and back test. And again, this is a Holly strategy, so I'm just going to back test the big data on this one. We'll probably get a couple, maybe even almost 3,000 results. But the point is, the stock is moving, the performance, I should say, is moving from lower left to upper right. Well, this was our old original quarterback, and this is before Holly gets a hold of it. This is Steve's version. Holly's version probably has another 15 filters added to it. All right, so then I said, all right, let's go back test Nickelback, right about the same thing. We'll do about the same start-stop time. Let's go ahead and see what happens if we just use that subset of 2,300 symbols that trade in nickels. And then we get a compare and contrast. Well, it's kind of interesting. There's about 900 trades less. There's 2,000 trades here. And again, this is a very basic scan to 2,900 trades. Profit factor over here is 1.4. Profit factor here is 1.44. 54%, very close. But what's happening here is I think the fills are showing up as better fills because the strategy return and the projected annual strategy return are showing up better than using the entire market. So there's something going on here that is giving a better performance. And my only guess I could say would be, you know, the nickel spreads are opening up some more alpha potential and more profit potential. So right off the bat, I went to Brad and submitted this to Holly, and we'll see what Holly can do with it. So, it may be a week or so, but you may see something show up on the board called Nickelback. You'll know where we found it. But the whole point here was to remind you guys that may not be aware there are 2,300 stocks out there that are trading in nickel increments, including our trade of the week. NDLS is one of these stocks now. So the idea being is if you're adept at trading and if you're good at maybe bidding and getting hit on the bid and certain types of entries, well, you've made a nickel spread. And that's kind of going back to the old days. So a bit of a retro step back here with this pilot program. We'll see what becomes of it. But I got curious and decided to see what would happen if we created that giant watch list. And I think it's valuable for you guys to see how to create those watch lists as well. And then drop it into a known strategy with known results and try and compare and contrast. And that was an interesting exercise. So I'll go ahead and minimize those. Again, if you guys want that link, it's in the chat window, and it's so easy to create a watch list. All right, so the final chapter here is price alerts. Last week was the 6th, so those were the price alerts that were set up. Let's just go through a few of these here real quick and talk about them a little bit. First one was ACOR. ACOR triggered, as we could see, basically triggered but did not go anywhere, and this can happen sometimes on these trend change lubricant type plays, but this one only has 13% short float, 45 million float, so the superstar numbers aren't really there for that one, but still it is a working trade, not down too much, but would probably be cut if it breaks down, below this particular level here. CBI was the winner of all winners. CBI gave, we set this thing at 1853 price alert, went as high as 24.90.25. There was some serious alpha. This is the poster child for what we're looking for, guys, on these swing trade, swing scalp, whatever you want to call them, day and a half, 2 or 3 day movers. These are the kind of moves we're trying to get. This is the kind of move we're hoping from NDLS. But CBI was a wonderful, wonderful trigger. It moved, and hopefully some people caught it. A lot of times when we see these moves, I think about a day and a half usually seems to be about the time before the trigger finger happy people start trying to take their profits. But if anybody did take this trade, boy, there was nothing wrong with looking at this level right here, maybe taking a little bit off there, maybe looking at that level, maybe even taking a little bit off there just to see where the supply starts to come in. CBI worked out great. CPSI, was this triggered? Yes, go ahead.
We have a question on CVI. Would you mind going back to that? And somebody's asking, does CVI look like it may go higher? And to what level? And there is another level I spotted on that chart to where if it does, break out that high.
You guys are killing me. You guys are just killing me. You're taking my whole show away. It's a very smart question. Who asked that question? Aaron?
That would be Aaron, yeah.
Aaron, CVI is on the list for setting up trades for next week, so we will touch on that. Great question. We're going to get to that. Here is, okay, let's talk about some risk management here. Here was the green line triggered of CPSI. CPSI, short float 35%, check. Float 13, very much check. But, we didn't get our blast off. For whatever reason, we didn't get it. So we have to go into risk management mode. Now, in my mind, this orange line here, you can see was support based off closing prices, not wicks. Had a couple of little areas right here of interest as well. So that, to me, would be the downside pivot line. This trade ideally should have been cut at 24.85. But we leave it on there just to show you and demonstrate, where some risk management might be. So in my mind, that level right there, the close of that doji right there, and then the close right there, then going back to all these closes back here, that seemed to be the line in the sand that if the trade did not work, which there was very little follow-through, that's where you let it go. WDR. Here is our trade right there. We pulled back, a couple days of breather, and a nice push. There's our 2 days, not quite 1.5, but 2 days of really nice alpha. Let's look back and see where we maybe could have looked to sell some. Well, no real surprise. If I mark up these levels from back here, you can kind of see why WDR stopped in its tracks after 2.5 days at this particular level. but nonetheless a nice trigger at 20.05, ridden all the way up, to above 22, a decent swing. And this is what Andy and I refer to as swing scalping. Setting up, maybe you're here, maybe you're waiting 4 or 5 days, patience, right? Patience. Boom, here comes our move. Nice 10% move. Maybe sell some at the close. But once we've got our move, we usually feel like there's follow-through coming the next day for at least a half a day. And once we get this type of move, we try and fade out of it. And like a surfer, we're turning around, we're paddling back out, and we're looking for the next setup. That's all we want. A swing scalp, kind of playing a daily chart like we would on an intraday swing scalp chart if we were scalping it. JCI, this is another good one. If you recall, this was a washout bounce candidate. So here was our washout bounce candle right here, I believe. Let's see, what date was that? That was the 6th. So basically this is the day we identified it. The next day, by 1 penny, it basically peeked its head up by 1 penny, triggered the alert, and then never was able to get back above. Now in my mind, once these trades that are these washout bounces, I love the long tails, but once the trade fails and starts to bleed back down into the tail of our washout bounce candle, that to me is the downside risk management. So ideally this trade, should have been managed and cut about 44.10, 44.09 down in those areas. I think we have one more. BOFI was the third and final one that we set. This one was not a trend change lubricant. Let me zoom out a little bit. It was making more of a 52-week high, actually. Yeah, it had its moments, but on the bigger picture, it was a 52-week high with 39% short of 59 million. So again, here's our 2 days, 2 nice days of really nice movement, really nice swing scalp above our green line level, which was the obvious level for a possible breakout. So again, swing scalping might be a new term that people have heard, but it's one that Andy and I coined many years ago when we were the lead traders in the Ditto Trade account, which was traded for 3 years. We had people attaching to us, much like Holly, but actually auto-trading as if we were the AI. Since we were the knowledgeable ones, people's brokerage accounts were attached to our brokerage account, and during the 3.5 years of Ditto Trade, we outperformed the S&Ps handily, and we did it primarily on this type of methodology, swing scalping. Not day trading for nickels and dimes, but looking for setups on the daily charts that make sense, being patient, waiting. When we get our move, still being patient, not to sell too soon, but to start to fade out of it, and 2-day move is a perfect move in the world of swing trading. So that was the alerts given out last week. I'm going to go ahead and just delete them since we've talked about them, and delete those 6 alerts. And finally, we are going to set some alerts going forward for next week. Very similar vein. We've got 4 of them that are from the trend change. So let's just start with one that was on there earlier but dropped off, but I keep an eye on it during the day so I can know. ESPR. Kind of fits the bill here as a stock that's been beat up pretty good and is looking to move above a significant level. I think these 3 wicks here were rejected, but there's going to be some more attempt to move through these highs right here at 1251. So I'm just going to go ahead and mark this up, and again we're going to go 28% on 15 million. That's a pretty good ratio. That's some rocket fuel right there. 15 million is not a big float. 28% of that 15 million is a significant. So I'm going to remind myself this is trend change lubricant. 1251 is going to be my price, but I got to remind myself when it goes off so I know why I liked it. 28% short and 15 million in the float. So we'll go ahead and set that one for long. And I don't care if it takes 2 or 3 more days before it triggers. That's the patience part. We're going to wait for our pitch. We're not going to swing at everything that we see coming at us. We're going to wait for our pitch. LCI was also on the trend change lubricant at one point during the day, but it backed off a little bit. But I still felt was worthy. I'm going to go right above here because I'm looking back more here than I am at today's highs. I'm seeing a pretty good pivot point right about here. So I'll mark it up, and then we'll go ahead and create that level as a price alert because I feel like if it can get above this with 33% short on 31 million, there could be one of those nice explosive moves we've been talking about. Not markup, price alert. Found it on the trend change lubricant. Notes 33% and 31 million in float. All right, a couple more from this particular setup. CAL, Calmarine. Where'd you go, Calmarine? Calmarine has 42% short, almost 43, and 32 million. Well, on these particular ones, yeah, we went 1, 2, 3 days. We could kind of go either way here. We could kind of drop in here and say, well, you know, maybe this makes sense for a pullback buy, and we could use that for a pullback buy. But let me tell you, the way this market's been with the shorts, it hasn't given them a chance to get out. We thought about the same thing last night in Jamie's webinar with GLF, and we said, well, this was a really nice run, but maybe we don't want to chase it. Let's go ahead and try and be conservative and go for a pullback run. Well, that really didn't work because this thing only had 25% short the float and still took off like a banshee. So, you know, going back to Calmarine, I think we're just going to use today's high. This thing has a much higher short the float, and if GLF can do it with that amount, then Calmarine should be able to do it with about the same. So we'll hope for follow through on this one. The high was 42.50. We'll go 42.51. It is a long trade off the trend change lubricant with a whopping 42% short. I really want to know that when these alerts go off. 32 million shares is not small, but it's not big either. Okay, CRR, don't know if this one was still on there. This one also, I mean, it's not my favorite setup. I would have liked it a lot more probably back here, but this thing has got 42% on 19 million. Again, a very explosive combination catalyst. So I think this thing bears a continued watch above, let's just call it yesterday's high. So we're going to mark it up right here, which comes pretty close to these levels over here, close enough for government work, but let's get an early look on it. And we'll go 980. Create price alert. 980. Notes or TCL. Whopping 43% on 19 million. That's a really nice ratio for short float to the size of the float. And again, I look at this when they pop up. I want to know what do these numbers mean because things can happen quick. And then was it SYNT, Andy?
Mm-hmm.
SYNT has come and gone. Here it is. It's on the short. It's on the lower end of the short float, 14%. I really like 15%. You know, I'll keep these in here just to keep a watch on them, but I'm most interested in things above 15% short float. But let's take a look at the float. It's 32, nothing huge, but a very, very long trending sideways action in this digital technology company. So let's see if we can see what might make sense. The high of that wick is 2055. The high of that one is 2047. Anything back here? 2081. That's interesting. What's this one right here? 2067. I say we go for this one right about here. I'm going to go 2167 because, you know, yes, this is a high right here, but we've still got a little bit going on back here, so we kind of want to keep an eye on what resistance we might have back here. So we'll go 2168. Create price alert. 2168, it's kind of a long shot because the short float is only 14%, but we'll take it on 32 million float. Okay, so those are the ones we set up for you guys this week. Yes, you know what? Let's see. One of them had earnings. CALM. Thank you for reminding me of that. My friend Bon Parr tweeted about. Yeah, he's reading my mind, Reese. He's stealing my thunder. But thank you for bringing that up, Reese, because I did want to point out we do have an earnings column. The CALM, if it takes too long while you're exercising patience, please keep an eye on that earnings date because it's about 7 earnings days away. All right, so with that said, you guys know the drill. If you have the premium service, you know that I can take my price alerts that we just created here on the 13th, highlight those. We're going to share them. share 5 selected price alerts, copy. Now we'll go down to where we were earlier in the chat window. I'll type in the word price alerts, and then I'll drop in the code. All you got to do is copy the link, load from your cloud, and it will drop that directly into your price alerts and add them to what you got going. So thank you all for your questions and comments, reminders. It's always been fun. The hour goes by very quickly. So I will see you all next Tuesday night for the next trade of the week. Actually, point of clarification, I will see you as well as a guest. Scott may even talk about that. But we're going to have kind of a dual webinar next week. I'll be talking about some things, the trade of the week, and we're going to have a guest outside of Trade Ideas come in and present some of his trading material as well. Keep an eye out for that on the emails. But for now, I'll pop this slide back up and let Scott come in and give us some discount codes and things to think about. Come on, Scott. You got your mute on? You there, Scott?
You may have to make the pitch there, Steve.
Oh, I'll tell you. All right, well, like Scott would say.
Am I back?
Thank you all.
There we
go.
There he is.
Somehow my audio source switched over to another cable that's also plugged in. That's odd. Yeah, okay. Well, as I was trying to say is thanks for kind of pre-rolling about Keith Kern's appearance next week. I'll have some more details about that prior to the registration for the webinar. It is we had him a month or two ago. I think he did a solo webinar and he got a good response, and we have him scheduled for the 20th. He's going to do a co-hosted webinar with Steve next week, and we'll have some more details forthcoming, or at least the registration details forthcoming end of this week, early next week. For thank you for everyone for attending. We have a promotional code that's good this month, Capture Alpha, all caps, the way you see it on your screen. And you can also download a handout with some information about this promo code and contact information by going to the Handouts panel on your GoToWebinar interface and clicking the little plus next to it. There'll be a download there. You can just save that to your desktop for reference later tonight. But trade-ideas.com/price is where to go to buy, and using that code saves 15% off your first month or year of premium, or 10% off your first month or year of standard. So both premium and standard come with a really excellent training package. It's a full hour of one-on-one training with Steve or Andy or Jamie Hodge. And as soon as you purchase a subscription, just go to the support section, click on training, pick the best time and date. And if you have not done that and already have a subscription, you're missing out. You should really go ahead and take advantage of it. It's provided for you. So, if you've been using our software and have any questions, write those questions down as they occur to you. Schedule an appointment. Get that going. So the major difference between standard and premium is the access to our advanced technology, the artificial intelligence, as well as unlimited access to our backtesting module, the Odds Maker, which is an event-based backtesting tool, quite a bit different than most backtesting tools out there. Also, access to our shareable price alerts and advanced windows like green bar ignore, red bar ignore windows, and we're always adding new stuff, so it's always got all the new technology is available in premium. But the standard membership cost also includes all of your exchange data fees and that free training and the charting and all the good stuff that comes with standard TI. So if you have any questions about that at all, email us info@trade-ideas.com. The session was recorded today, so you'll have a email notification tomorrow sometime or maybe later tonight with a link to the webinar replay and a reminder of what the promo code is. If you want to follow Steve on Twitter, do that at TodayTrader. We also have Jamie Hodge at QuantBot. Dan Merkin is at TradeIdeas1. Go ahead and like us on Facebook, TradeIdeasPro at Facebook.com. We post some original content there from time to time, so if you're on the Facebook, you may as well have that in your feed so you get notifications about those updates. Info@trade-ideas.com is the best place to send your technical questions about trading. It gets routed from our help desk software directly to the appropriate team member, or you can contact Steve directly at Steve at, and Andy is Andy at, both at TradeIdeas.com. Phone number is great if you need assistance with billing or subscriptions during regular business hours. Thank you everyone for attending. And you'll get an invitation for tomorrow's webinar tonight. Well, you're going to receive the invitation tonight for tomorrow's webinar, and that's at 5 o'clock p.m. Eastern tomorrow, and that's the Trading Studio. Andy's going to be hosting that, and I believe co-pilot for that will be Jamie Hodge. Thanks, everyone. Thanks, Andy. Thanks, Steve.
All right. Thanks, Scott. Thanks, everybody.
All right, guys.
See you later.